I was recently working on a matter that involves some alleged misstatements in a set of financial reports. And as I was talking to my instructing solicitors, I was using the term adjustment. And as we were chatting, it occurred to me that I was using that term with a very specific meaning that may not have been apparent to my instructing solicitors. And so that's the topic of today's episode. What do accountants mean when they use the word adjustment? This episode is going to be pretty short and sharp because the answer to this question is quite straightforward. It does help, however, to start thinking like an accountant, and what we're talking about when we're talking about adjustments is a type of accounting entry. There are two really common types of accounting entry. The first is the transaction, and that's where there's been an exchange between the organisation we're doing the accounting for and some external party. Sale of goods, provision of services, buying something from a supplier, getting work from our employees. Those are all transactions in that they involve us exchanging something with someone external. The other type of accounting entry is the adjustment. Unlike a transaction, there is no external party involved. It's an entry that's made by the accountant to either adjust the measurement of a particular accounting item or the way that it's recognised. A really common example of this is depreciation. There's no third party involved, but we need to adjust the measurement of some of our assets because their value has decreased over time, and that's what the accounting standards require that we do. There are other accounting standards that require us to make these kinds of adjustments, and I'm sure I'll talk about some of them in future episodes. Because a lot of adjustments are driven by accounting standards, it's typical that you'll see most adjustments are performed at year end, when the accountants are going through the process of preparing the statutory accounts and making sure that everything complies with accounting standards. That's not the only time though, there might be some performed at month end, and equally you might also see adjustments performed if the accountant realises that they've made a mistake. Adjustments are also what's required if we make an error or need to reclassify something. So there you go. If you're hearing an accountant use the word adjustment, they're talking about an entry in the accounting system that reflects a change to recognition or measurement, but it doesn't involve any external party.